$250 billion for an AI company owned by the exact same guy who owns the acquirer. I'm taking crazy pills.
Oh, stop. You act like SpaceX doesn't need the compute. It's essentially an internal transfer of the most valuable asset on Earth.
It's a $250 billion left pocket, right pocket maneuver. Sullivan and Cromwell must be charging fees in Dogecoin.
Read the footnotes, Nate. The valuation actually tracks with the 12 other mega deals we saw this quarter.
Fine, prove it to me. The rundown. $1.7 billion of structured credit for Klarna. Vard Partners just backed up the absolute largest truck they could find.
I read the filings on that. It's not just a truck, it's a carefully tranched fortress. Klarna gets the liquidity to push buy now, pay later into every checkout cart, and Vard gets a very protected yield.
You call it a fortress, I call it a giant band-aid for consumer debt.
Well, speaking of debt, the Q1 numbers just dropped. $438 billion in total completed deal value.
Best first quarter in 5 years. 80% of PE dealmakers are practically skipping to work right now. Balance sheets are healthy, regulatory clouds are parting. It's a beautiful time to be a banker.
Are you reading the same report I am? Because North American acquirers closed 117 deals and are underperforming their non-deal-making peers by 5.4%. That's terrible capital allocation.
Oh, come on. You can't look at a single quarter of stock performance and call it bad capital allocation. The big one. $250 billion. I just need to say the number out loud to make sure I'm not hallucinating.
You aren't hallucinating. SpaceX is officially buying xAI for $250 billion. And honestly, my favorite part of the press release is the straight face everyone is keeping while Elon effectively buys his own company.
Hey, Sullivan and Cromwell are leading the advisory charge. You know those partners aren't complaining. The fee pool on a $250 billion transaction is enough to buy your own private island, or at least a very nice yacht.
I read the footnotes on the structuring and it's dizzying. But look at the macro picture here. This single deal makes up more than half of the entire first quarter deal volume. Total Q1 completed deal value hit $438 billion.
Which is a 5-year high. The market is back, Maya. Financing conditions have thawed out. Debt is actually getting priced reasonably again. We saw 12 mega deals over $10 billion this quarter. 12. We haven't seen velocity like that since 2008.
Okay, wait. I hate to be the rain cloud here, but look at who is actually winning. Yes, deal volume is up, but North American acquirers are currently underperforming their non-M&A peers by 5.4 percentage points.
Because they're paying massive premiums for AI infrastructure. It's an arms race.
No, because they're doing sloppy deals to appease impatient boards. They closed 117 deals in North America, and the market is punishing them for it. Meanwhile, European dealmakers are outperforming by 6 full points. They're buying boring, profitable businesses.
Boring doesn't put a supercomputer on Mars. Look at the 80% optimism metric from private equity this week. Balance sheets are healthy. The regulatory environment is actually playing ball for once. This SpaceX's deal is just the apex predator of a very healthy ecosystem.
Apex predator is one way to put it. I call it a valuation distortion field. I mean, xAI is brilliant tech, but justifying a $250 billion price tag requires assumptions about future cash flows that border on science fiction.
Spoken like a true tech reporter who missed out on the seed round. I'm telling you, the synergy of pairing the world's largest satellite network with that level of compute is unprecedented.
I'm sure the pitch deck was beautiful, Nate. I just want to see the actual integration plan.
You'll be waiting a while for that. But speaking of massive deals that might actually face some gravity, the whispers about McCormick are getting really loud.
Oh, right. The $44.8 billion Unilever Foods tie-up.
Exactly. We need to talk about whether regulators are actually going to let that happen. Voices. 12 mega deals over $10 billion in a single quarter. The analysts are officially comparing this to 2008, which frankly gives me a little bit of PTSD from my junior banking days.
Well, the wildest quote from the strategists this week is that over 80% of private equity and corporate dealmakers are expressing high optimism for the rest of 2026. They're citing healthy balance sheets and a favorable regulatory environment.
And why shouldn't they? First quarter deal value just hit a 5-year high of $438 billion. You've got SpaceX dropping $250 billion on xAI. The money is flowing?
I'm sorry, but that 80% optimism is pure corporate delusion. Look at the actual performance data. North American acquirers closed 117 deals this quarter, and they are underperforming their non-M&A peers by 5.4 percentage points.
Okay, yes, the boardroom grumbling is very real over here. Investors are heavily punishing them.
Exactly. They're frantically buying things and actively destroying shareholder value. Meanwhile, European dealmakers are actually outperforming their peers by 6 points. Europe is doing smart, disciplined deals. North America is just throwing money at AI and hoping nobody looks at the quarterly returns.
I'm going to push back there. The AI infrastructure race is existential. You can't measure the SpaceX and xAI deal on a standard benchmark curve. Sometimes you have to buy the life raft even if it wrecks your balance sheet.
A $250 billion life raft. Sullivan and Cromwell must be thrilled with those billable hours.
Oh, they are definitely redecorating the partner lounge right now. But it isn't just tech. The whispers about McCormick planning a $44.8 billion mega merger with Unilever Foods are getting really loud.
Consumer goods trying to catch the exact same mega deal fever.
Which is exactly what we need to watch tomorrow. Keep a close eye on the regulatory wires. If McCormick and Unilever actually try to tie the knot, we're going to see if this antitrust environment is actually as favorable as those optimistic deal makers think it is. Spill the tea. Okay, I have to bring up the grocery aisle gossip because my phone has been blowing up all morning. McCormick and Unilever Foods, $44.8 billion. Tell me you are seeing this.
I am seeing it, and I am already rolling my eyes at the synergies slide. $44 billion to combine garlic powder and Hellmann's mayonnaise.
It is a massive scale play. You own the flavor, you own the condiment, you own the entire shelf space. Plus, look at the macro climate right now. We had 12 deals over $10 billion in Q1 alone. That is the highest since 2008. Everyone is swinging for the fences.
Sure, they are swinging, but they are completely striking out in North America. Have you looked at the post-deal performance metrics? Acquirers here are underperforming their non-M&A peers by 5.4 percentage points. They closed 117 deals and are basically setting cash on fire.
Setting cash on fire is a little dramatic.
The data is the data, Nate. Meanwhile, European dealmakers are actually beating their peers by 6 points. Maybe McCormick needs to hire a European integration team.
Fair point on the geography spread. But you talk to anyone in private equity right now, over 80% of them are wildly optimistic about the rest of 2026. Balance sheets are healthy.
Of course they are optimistic. They get paid on the transaction closing, not the 5-year return. Your old banker bias is showing.
I will gladly own that. I just love a good mega deal. Though this McCormick tie-up is going to be an absolute headache for antitrust lawyers.
Oh, definitely. Keep a close eye on the regulatory wires tomorrow. I guarantee the FTC is already drafting a complaint about the monopolization of potato salad.
I am watching that closely, along with the flood of mid-market AI tech deals we expect to hit the tape before Friday, which actually brings us to the real elephant in the room.
Or rather, the rocket ship in the room, $250 billion. Tomorrow's radar.
Keep your eyes on the regulatory wires tomorrow morning. If the FTC is going to make noise about the $44.8 billion McCormick and Unilever Foods tie-up, it happens this week.
I still can't believe we're seeing a mega merger over spices and mayonnaise.
Condiments are a serious strategic moat, Maya, but the boardroom grumbling is real. North American acquirers closed 117 deals this quarter, and they're underperforming non-deal-making peers by 5.4%.
Because they're overpaying. 80% of dealmakers claim they're highly optimistic right now. That's just banker speak for having zero discipline. Look at Europe. Their dealmakers are actually outperforming by 6 points.
You're being too harsh on the U.S. buyers. Financing conditions finally thawed. You can't blame them for rushing the field to grab AI infrastructure before the week closes.
I can, and I will. Buying just to buy destroys value. Speaking of questionable choices, wait until you see the footnotes on this new Klarna structured credit deal.
The $1.7 billion Verde transaction? Walk me through it right after this.